Bank stocks have gotten wrecked over the past couple days with investors looking to purchase at a bottom, but yet there's no bottom to be found. We went through this about a week ago talking about the inverted yield curve. There's been no time in history that the yield curve has dropped this precipitously in this short of a time. We have already lost two banks. The FDIC has made some moves, but investors are still panicked. And we saw that once again today. The question is, which names should we be looking at? Which names should we be looking at buying? Which names should we be shorting? Should we just be looking at common stock? Are there other vehicles out there that we might want to take a look at? What is going on with Charles Schwab? End of the day, we did something that we normally do when we see a healthy market. One indicator that's giving a clear signal. If we look at S&P futures, we can see the violent move that we had. This violent move obviously took place during the CPI. Essentially, the CPI came in across the board and came in line. I'm not going to spend a lot of time reviewing the numbers right now because the bottom line is it's behind us and what has happened has happened. In other words, we've rallied up and now we're going into PPI, which is important tomorrow at 8:30. But the reaction's what's important. There was relief. We never got even to the level of testing that 8:30 low. We never got there. And I think that's a really important distinction because usually in these markets, you'll see some kind of test. We did not do that today. So as the futures continued to play out, you can see the rally right up to this core level. And that's really been a sticking spot for us, that 39.80. Every time we kind of get up to this area, we start seeing some resistance. And when we see that resistance, we just negate. And this is a level I've been watching all day, and I'm going to give you the NASDAQ level that we need to break as well. But that 39.80, it's been like a wall. It's been a real problem for us. So we have to watch the 39.80 tomorrow on the PPI. That's very important. What's more important is what happened in the last hour today. We're going to talk about why this is significant. Look at that move today. Right off that 330, nothing but straight buying. You would think going into PPI, we'd see weakness. We didn't. Why is this significant? Now, those that are new are not familiar with this chart. Those that have been watching these daily videos are familiar with this chart. This is the last hour of trading. If the last hour is positive in net buying, then they add a +1. If it's negative, they add a -1. And so it goes and so it goes. This is out to 20 years right now. So we're looking at 20 years of data. You can see the trajectory of the market. You can see how we act when we start to sell off. Then all of a sudden, of course, there's weakness when they're selling in the last hour. The last hour is important because that's when institutions make their biggest moves. If we showed us clearly where the bottom was, and we can see that very clearly, selling into it, and then we just rallied, and that was it. Never came back, never anywhere near it. Well, we're starting to see a positive divergence here. We're starting to see the market actually come down. And at the same time, we're starting to see the last hour get up. In other words, since January, we've been up and down, and we have that little move right here. We can see that triangle right there. I like how thick these lines are. Comment on that if they're too thick. See how we're coming straight across? You have a positive divergence here. In other words, we're getting more and more buying in the last hour. And at the same time, the market's dropping. This is exactly what you want to see because the last hour is when institutions buy. Nvidia was one. We were trading in the Alpha Chasers community. He had this huge move off the open. We've been looking at this for a while now. This is from the newsletter. If you don't get the newsletter, link in description. Now, some of the games they've been playing were breaking VWAP, refusal to break it. And then you look at this and say, well, I'm not going to buy it because it's not above VWAP. The issue with that is you're in a trading market. You have to understand what kind of dynamics are going on right now. So what they do in these kinds of market is they test support all day long. You'll test resistance. People will buy the breakouts and then they'll get chopped up. Then they'll get stopped out and then they'll wonder why. You're not in a breakaway market. It's very important to understand what kind of market you're in. And you are in the kind of market that is very clearly just going to do this. You're just going to bounce around. There's nothing wrong with it. It's actually a lot of fun, and you can just constantly be pulling money out of it once you learn exactly what's happening. Nvidia has nothing to do with what's going on with the regional bank space that we're about to address. The issue with Nvidia is that people are saying the PE is too great. Now, if you have a bank run, people are going to go out there and they're going to sell high beta. They're going to just get out. They're just going to get out of the way, right? It's just really clear. But when you start drilling into these numbers and you start looking at these levels and you start seeing some of the, for example, you look at this wick right here, you can see the test. And this is all I needed to see. We saw the test and then we saw the retest. And then it became clear to me that by the end of the day that this had the potential to run into the close. That's all you're looking for. You're looking for resistance and support to flip at key times during the day. Say it again. You're looking for resistance and support to flip during key times during the day. The last hour is a key time. There is a reason that Sediment Trader, who this is their chart, has a chart literally called the last hour. No institutional buyer wants you to know what they're buying, because then you'll start buying it and make their life harder and you'll drive up their average cost. They don't want that. So that's why you always see these moves at the end of the day. This is a heck of a move in Nvidia going into a regional banking crisis and PPI. And what are we doing? We're pushing. We're above the 200. We're above the 55. We're above the 9. This gets pretty clear. If we put our volume profile in here, we can see what happens if we get over this level. There's nothing up here. Nothing. If we zoom out a little bit and include even more of this, there's still significantly less than's down here from all the way back to 22. And that's exactly what you want to see. You really only want to be going back about a year if you're going to look at volume profile. And it looks like you're about ready for blast off here. So don't sleep on this. I know PPI is coming out tomorrow. If PPI is high, it's going to be a problem. We all know that. If you're interested, we do a live stream tomorrow for PPI. It starts at 8:15 a.m. and it's available for replay. Make sure you subscribe to the channel and turn on notifications so you're made aware of it. This is one of the top two that we were talking about in regards to just tech names. There's some other names here that you should really be taking a look at in the banking space. We're going to get there, some longs, some shorts. But if you're taking a look at what's going on here on Tesla, here's your 5, okay, your 5 SMA. And you can see this right here. And now you're above it. This is a proprietary indicator that I developed. Very simple. It's basically showing you daily moving averages on a 15-minute chart. The blue line is the line. If you take a look at what's going on here, here's your 3, here's your 5. When was the last time you've been above the 3 and the 5? When was the last time? It's been almost a month at this point. Okay, so you're starting to see a turn. Interesting time to see a turn into CPI, into the Fed coming up next week, into a regional bank crisis. And we're seeing Tesla lift and break out of this area. And it's not just a little break. And I want to be real clear about that. That's not a tiny break. Look how we flip the VWAP and we just run into the close. Look at the volume at the end of the day. Our black line is determining our average price. And you can just see how we're pushing straight over it into the end of the day. And if we take a look at that, sure, we do see that sometimes, but we didn't see it the previous day. We didn't see us get over everything, all our clouds, all our lines, everything we cleared today. And we really haven't been seeing that. We saw some of this at 3:30 back here on March 9th before we had the regional banking news really start to kick in. But we need to pay attention to this. I would not sleep on this name. Take a look at this on an hourly chart and you can see how you're setting up here. You can actually see the trajectory change a lot clearer on an hourly chart. There's a reason why I like using different time frames. I think it's extremely helpful. But if you take a look at this, you can just see this DTL or downward trend line. You just draw it from right here. Well, what happened today? We ran to it, couldn't get above it, formed a flag, and then broke out. So now you have a flag closing at the high of the day on Tesla. Nvidia is near highs. That usually does not happen if we're going to crash. Let's take a moment and look at XLF, the finance sector. The end of the day, the last hour, did we have buying or did we have selling? Now, what's even more impressive about this is this last hour bar, it only starts at 3:30. So the last half hour, you just had incessant buying the whole day. Again, you're not going to see this if people think that we're going to crater. JP Morgan is out there actually buying regional banks on their prop desk. They issued a statement about it last night. So they're getting involved. The sell-off in the regionals today was very simply profit-taking from people that made a killing yesterday. And there's absolutely nothing wrong with that. I didn't see another bank fail today. I didn't see any more issues. I didn't see a new bank with lines out in front of it. Not saying something else can't happen. There's always another shoe. Always another shoe. Now, here we are wedged in on JP Morgan, but what did we do? Well, we tried to get above the opening price today. We rejected, meaning those people just got out of the way. But you have a clear runway here if you start to flip, right? So if we can start getting over this, let's call it 135, we're going to continue to push. Even Goldman got in the picture today, and Goldman Sachs has really been dragging lately. And it actually started to look fairly decent today. So we'll have to see how this plays out, but you can see how you're breaking down. I'd watch that 328. Now, before we get into the regional banks, we touched base on this last week. And obviously it got worse than we thought it was going to get, but we did see issues. And the major issue is from when you started in 1976 at 1.59 on the yield curve and got all the way down to here, which would have been a 2.5% move, November of 1979, that took 3 years for that to happen. That means banks had 3 years to prepare for what they were going through. During this period in time, with Powell's historic rate hikes that have never been done in history, you had less than 18 months for banks to prepare themselves and to turn around. It is the velocity. It is not just the move that's the issue. It's the velocity of the move that's catching everybody off guard. Now, one of the easiest things for you to do, this is Western Alliance Bancorp. One of the easiest things for you to do is to run a scan in the last half hour to hour and see which names absolutely exploded. If you take a look at this name, WAL, into the end of the day, look at this move. Nice piercing pattern, takes out that low, makes you think it's going to break going into 340. Gets you around that 23 level because now you're like, I should just get out of the way. The trade didn't work. I've been waiting all day, and then we gap filled. They're just messing with us. I mean, it's pretty clear the shenanigans that are going on, for lack of a better word. And so you can see right here that you come across 3-bar pattern, 1, 2, 3, boom, breaks out, flags, boom. Half hour, 7 points. Do you think that's retail that's doing that? Do you think retail's buying in the last half hour because they need to own Western Alliance Bancorp? Or do you think it's an institution that wants to have a position in the stock? PacWest had a nice little run today and then reversed. I really don't have a problem with this move. Now, talk about a classic, what they refer to as the abandoned baby pattern. You see this bar all by itself, red. It could be a textbook. Some people would refer to this and say, oh, that could be referred to as a morning star. The gap, the huge gap down makes it a different pattern. It's actually bullish. So I don't really have a problem with the fact that we gapped down, everybody panicked, and then we rallied up, and guess what everybody did again? Panicked because now they have to buy. You had 5 directors and officers over the past couple days start buying the stock. That's what you want to see. You want to see them putting their money where their mouth is. And instead of coming out and saying everything's going to be great, what they're doing is they're coming out and buying stock. And I think that's really important. Also, their deposits are under 250,000 are right around the line of where JP Morgan's are. So they're kind of in line with them, and they actually have less on a percentage basis loss than JP Morgan. So you never know how this is going to play out, obviously, and they don't have the depth of a JP Morgan or the diversification of a JP Morgan. But this is an interesting trade the more I look at it, and I like it. Now, what I did today and what we did in the Alpha Chasers community, my hope was that we were going to see more of a push. But this market, in the morning, we started buying this pre-market around $12. And then as it traded up, we pulled money out. And then we just moved the stop up to around 13 3/4 and then got stopped out of it. Now, my hope with something like this is that it's going to run. And I'm just going to point out a couple things. When you have preferred shares, like these are preferred shares. Now, what is important about the preferred shares? Preferred shares, they pay a dividend. This one is paying 7 3/4. My hope was to get up and in it, and we did fairly well with the up and in part. And then what wound up happening, ground up, and as we traded up, and up here we're up about $4, we're pulling money out up 20-25%, up 30% on the day, and you're just taking money out. And then my goal was to stay in this trade. But after a while, it kind of became a little clear that we might have an issue. So we just put a stop out there, and then we just got stopped out. It's not a big deal. We'll just find another way in. I would strongly suggest that if you are a long-term investor or interested in being a long-term investor in some of these banks, you start looking at some of these preferreds. This is paying 7 3/4 when it's trading at 25. We're at 13. You're getting well over double that on your yield as long as they pay. Now, if the company goes bankrupt, all bets are off. And so you do have risk. But preferred shares are exactly what they say they are. They are preferred over common shares. And I would strongly take a look at these. FRC is another one. FRC bothered me a little bit today, the way that it traded. And these are the names that I'm really focused on because it seems like for whatever reason, it's the California banks that seem to be the issue. And I'm not so sure why they're the issue right now. We're seeing that with SIVB, but they're the ones that are getting the most pressure. And we can see that we just opened straight up today, right? And you see that open on FRC, and then that was it. you were never able to get over that opening price. And this is a really important concept for you to remember, guys. If you can't get over that opening price, something's going on. And we're going to want to pay attention to whatever that something is. Now, you really didn't make any progress at the end of the day, right? We looked at Wall and we saw how that did at the end of the day, and we saw the buying come in there, but we didn't see that on FRC. You want to pay attention to the names that are rallying, and the ones that are falling, we'll find out later why they're falling. There'll be a reason why we'll find out why this is still coming in. In the meantime, I found this really interesting. This is FRCPM, and this is a perpetual series preferred, paying 4%. You're trading at $9. When this was issued, it was issued well before we started doing the rate cuts. But the purpose of me showing you this is you had no love in this whatsoever today. So why isn't this rallying where PACW preferred was rallying? There might be something under the hood here. There might not. It could just very well be a gap fill. But what's nice about this is it gives us a very clear level. Now, you always have gap risk and halting risk with what's going on right now, but you look at these core levels, and if you can get to these levels and flip and hold, they might be worth taking a look at. But there's something different going on with FRC. So I haven't pulled the trigger there yet, and I am sitting here watching it. The number one that I'm really looking at long-term right here is JP Morgan, because any corporation is going to look at this right now and go, we need to have an account there. Any corporation, any CFO right now is saying, we need to look at this and we need to figure this out. And that's what's important about this, okay? That's what's really important about this. Everyone's going to want to go to safety. They're already not getting yield. If they want yield, they can go buy T-bills now. So they're going to buy JP Morgan. And I think JP Morgan's setting up here. Schwab has a very clear area in here. And you can see what we're dealing with, bouncing around, how we're hanging right in there. I like Schwab. I think his comments yesterday were excellent, meaning the chairman, the founder of the company. He came out and laid it all on the table, laid out their whole financials. He doesn't really need to do that. I know he wants to rally the troops, but he could have had the CEO do it. And that's not what happened. He did it. And I think that's somewhat significant. And that's why we saw that rally. Now we seem trapped. So I'm looking more for this to get back to that 54-ish level down here and then break through that 58.5 level. And there are my key levels that I would be watching. The number one chart you need to watch tomorrow, NASDAQ. You need to watch this. I have the NASDAQ futures. Here's the symbol for it. You can see how we broke down right here on March 7th. Tried to rally, came back down, unable to. Guess what we tried to do today and we're unable to do? Get above that. In other words, we got the one close above it and then we just reversed and that was it. At the same time, look at the end of the day. Look what happened in the last half hour. You're building a huge flag on the NASDAQ into the close. This should be the number one chart you're watching tomorrow, this 12.3 level. And this is the level that you need to pay attention to. Should we flip here and then get a retest back down? That's exactly what you want. You want to see this go, come back down, test, and that would be a great spot to probably get involved. Watch this video if you're struggling with day trading. It's a 10-minute tutorial on a very simple pattern that you can execute yourself, and most people find it very helpful. Have a great night, everybody. If you found value in this, do me a huge favor and share it.